All right, let's jump right in. There's a huge question making the rounds in the Dubai real estate market right now. You've probably heard the whispers. Developers are offering some pretty big discounts. We're talking 10, 15, some people are even saying 25% off. So what's really going on? Is this the golden ticket? The discount you've been waiting for? Or is it just the first sign of a much bigger problem? It really all comes down to this one question for anyone even thinking about investing. Are we looking at a prime opportunity to buy, or are we staring down a potential market crash? The chatter online, it's all over the place. But the data, well, the data tells a really fascinating and honestly, a surprisingly clear story. So, what are these deals actually looking like? Well, it's kind of a mixed bag. You've got some of the big name developers playing it safe, maybe offering a small 1 to 2% discount or sweetening the deal with a better payment plan. Others are getting a bit more aggressive, maybe knocking 7% off. And then you have the real head turners, deals that are hitting 15, even 25% off, sometimes with that 4% DLD registration fee waived. And it's this huge variety that's causing all the confusion and all the excitement. And as you can probably guess, this whole situation has split investors into two very different camps. On one side, you have the opportunists. They see these discounts and they're thinking, this is my chance. It's time to go deal hunting. But then you've got the skeptics. They're looking at the very same deals and saying, nope, not good enough. They're convinced a much bigger price drop is coming and that developers just need to wake up and smell the coffee. And believe me, the skeptics are not shy about it. Just listen to this message we received from one potential client. It just captures that feeling perfectly. I mean, it's almost poetic, right? It really shows you how strongly some people believe the market is overvalued and that developers are just completely out of touch with reality on the ground. Okay, but here is where we're going to take a sharp turn. Here's my contrarian take, and this is all based on the data. If you are looking at the off-plan market, waiting around for even bigger discounts is a huge mistake. The prices you are seeing right now, these deals, these incentives, this is very likely the bottom. So let's break that down. Why am I so confident about this for the off-plan market? Well, there are three really powerful economic forces at work here that tell me these prices have pretty much hit their floor. First off, the major top-tier developers, they are flush with cash right now. They have absolutely no reason to slash prices and kill their own profit margins. Second, they have another tool in their toolbox. They can just pause new project launches. I mean, why sell cheap today when you can just wait and sell for more tomorrow? And third, and this one's a biggie, construction costs are going up thanks to inflation. Developers are not about to start selling new units at a loss when their own costs are rising. It just doesn't make sense. And hey, if you think this is all just theory, we have literally seen this movie before. Just think back to the huge market shock during COVID. For the off-plan market, the best deals were being made quietly in the first couple of months. By the time those price drops actually showed up in the official data in July, guess what? The recovery was already starting. That window of opportunity was incredibly small. Okay, now let's pivot. Because the second we switch gears and look at the secondary market, we're talking properties that are already built and ready to go, the whole story just flips on its head. In this part of the market, being patient might be your best bet. And here's the first piece of hard evidence for you. Just look at this. In the last 2 weeks of March, the number of sales for ready properties just fell off a cliff. We're talking down by about 50% from normal. The market literally slammed on its brakes. So, why the sudden stop? Well, it's a classic standoff. You have buyers who hear about these developer discounts, so they come in with these really aggressive offers, thinking they can get 20, 25% off. But the individual sellers, they're not in the same boat as a developer. They're holding their ground. And this huge gap between what buyers want and what sellers will accept means almost nothing is getting done. Now here's the real plot twist. Even with that massive 50% drop in the number of sales, the prices of the few homes that did sell, they haven't moved. In fact, the average price per square foot actually ticked up a tiny bit. This tells us that sellers aren't panicking. They're just sitting back and waiting. And again, let's look at that COVID playbook for some clues. In the secondary market back then, prices stayed totally flat for about 2 months. Then they started a very slow, very gradual decline, and they finally bottomed out 5 months later at just 2% below where they started. So history suggests we might see a similar thing now, a stalemate, and then maybe a small dip, for those who have the patience to wait. But a crash? Unlikely. So here's the really important warning for anyone hunting for a deal in the secondary market. Yes, some opportunities are probably going to pop up, but they're going to come from motivated sellers, people who desperately need the cash. But the owners of the really great properties, the best units with the best views, they know what they have. They're more likely to just pull their property off the market and wait. So the real risk of waiting is that the property you actually want, it won't be on the discount shelf.
But wait, there's one more piece to this puzzle we have to look at: the rental market. It's often the canary in the coal mine for the overall health of the market. And right now, it is flashing a pretty clear warning sign.
Just like the sales market, the actual price of rent is staying strong. It doesn't matter if people are renewing their lease or signing a new one, the average rent they're paying hasn't really changed. Landlords are not cutting their prices.
But, and this is the number you need to pay attention to, the volume of new rental contracts has dropped a lot. So what does that tell us? It tells us that the flow of new people moving into the city, the people who need a new place to live, has slowed down. And that is the first real sign of softening demand. And this slowdown puts immediate pressure on some very specific people. If you're a landlord right now, it's going to get harder and take longer to find a new tenant. If you're an off-plan investor about to get the keys to your new place, you're about to enter a much tougher rental market. And if you're one of those flippers who is planning to sell your unit for a quick profit at handover, well, that strategy just got incredibly risky. Okay, so we've looked at the off-plan market, the secondary market, and the rental market. Let's pull all of this together and figure out a clear, simple game plan for what to do next. And this really lays it all out. It's a tale of two very different markets. For off-plan, all the signs point to developers holding strong, which means the discounts we're seeing today are probably as good as they're going to get. But for ready properties, the data shows a market that's feeling the pressure, where waiting for a motivated seller to give in could be the smarter move. Look, if you remember just one thing from all of this, let it be this. You cannot think of the Dubai property market as just one big thing. It's not. The forces pushing and pulling on a brand new off-plan tower are completely different from what's happening with a ready villa in an established community. Your strategy has to be specific, it has to be targeted.
There's actually a perfect economic term for what's happening, and it's divergence. It just means that two things that seem similar are starting to move in different directions. And right now, in Dubai's property market, we're seeing this huge, growing gap between how the off-plan and secondary markets are behaving. Understanding that divergence is everything.
And that brings us to the final question, and this one is for you to think about. Knowing that these two markets are on different paths, creating totally different kinds of risks and rewards, where are you going to place your bet? Are you going to lock in an off-plan deal right now? Or are you going to play the waiting game and hunt for a bargain in the secondary market? The next 6 months are definitely going to be interesting.